As we were working with startups, we saw how innovative they were, what interesting problems that they were solving, very large problems actually, but there was a lack of funding, right? So I think I met Rama at this kind of working with startups, mentoring startups.
Starting with Josh Talks, what made you invest into them?
So they're a very exciting company, and I think what we really liked about them is that they're in the heart of India, and I think they understand the problem at the heart of India. So they kind of describe themselves as a TED Talks for Bharat.
Right. Thanks, Ritu, for being with us on the show. Our show is all about, wiping out the norm, and you wiped out the norm by being an investor from a background in physics, and you've been a researcher throughout your life. Let me start by asking you as to how did you even develop this, interest in investing and learn the art of choosing the right companies, because your portfolio just speaks for itself. It really stands out from the other VC funds.
Thank you, Radhika, for having me. I'm super delighted to be here and, a fan of what you're doing. Yes, I did start out life as a physicist, and I think that life as a physicist teaches you certain kinds of skills, in analytics, thinking about problems, thinking about innovation. And I think I find all those things in my job today. So I don't see this as that different. I see this actually fairly similar. I think the thing that was always exciting to me was the applied stuff, applied side of innovation, of actually seeing the innovation in the market. And, as a VC fund, you get to see that up and center. So from being a physicist to here, it's been a journey of, looking at innovations. And I continue to do that today. So that's how I look at it.
Oh, wow. But how did you end up meeting your fellow co-founder?
Yeah, so that's, I think we were mentoring startups. And I think in those days today you might call that an accelerator or that incubator, something like that, one of those terms that is used today. So, we were working with startups. This is roughly about 2010, 2011. Funding VC early stage was really not a vibrant scenario in the India market. So as we were working with startups, we saw how innovative they were, what interesting problems that they were solving, very large problems actually, but there was a lack of funding, right? So I think I met Rama at this kind of working with startups, mentoring startups, and then we started talking. Then we said we would start by working more closely with some companies, and eventually said, look, without putting money where your mouth is, we can do whatever we like. How do we get money to these innovations? And that moved on to how do you institutionalize that? How do you grow that? And, how can you continuously do this for innovators down the line? So that's really how I met Rama and how Ankur evolved out of that.
Understood. And how was it to raise your first fund? Because at that time, raising a fund led by a women fund manager was not so heard of.
I would say that we forget the women part about it to start with. Just raising a fund,
it's difficult.
It wasn't what India had been used to funding. We would get questions as like, what's the interest rate you're going to pay us? Will you give us money back? Right? The concept of venture capital, the concept of putting in equity, that it will take time for it to mature. There will be failures. There will be massive successes. I think the asset class was not very well known. So I think all of those things presented challenges. It didn't help that we were first-time fund managers. Both of us were coming from operating backgrounds. So while personally in our lives in the past, we had built companies, we had brought innovations to market, and that's the skill set that we were bringing to build a fund. And we were early stage focused. I think some of those all were challenges. So in short, I would say it was a rough journey, but there are always angels. So you truly get to understand why it is called angel. So we had some people who, there's a gentleman I met in the US, in Colorado, that didn't know anything about me. Then and there committed money and said, okay.
This is what?
Just having a chat as to what we wanted to do, right?
Okay.
And, obviously been an amazing support throughout it all, but his risk appetite, is literally, for us, it was like being an angel, right?
Yeah.
So, okay, wow, all right. When you walk the streets, you've been to multiple offices around here where, it was, the leap was not something that many folks were willing to take.
Right. So how long did it take for you to raise the money?
So I think it took us roughly about 2 years for the full fund, right?
Okay.
What happened for us was that we had these angels, as I spoke about, and then, we started making investments very early on. And that was one piece of advice we got, that, look, just start, right? Because you can keep talking academically. So people don't know what you're talking about. So we started making investments. So then we had a portfolio. And that helped us go to other people. And finally, a couple of institutions came in to back us. And, that obviously is a different ballgame because the check sizes are something very different. And that helped us close that fund.
So which was your first institutional fundraising round?
So our first institutional investor was probably 𝒔𝒐𝒂𝒓. It's a Dutch good growth fund.
Yeah.
They are an LP based out of the Netherlands. And, we were, one of their funds that they invested in.
But tell me that while I speak to you, I get this question that you've been an operator, you've seen products get launched. Why did you not think of starting something by yourself, as in a product or a service, and why a fund?
So I get that question all the time. And there are two answers to that. One is that I just didn't have the burning idea, right? And I think you need a burning idea in order to be the entrepreneur, to say, okay, I will take this out and I will make this happen, right? So I think that's one. And second, I realized something about myself is that, I like these varied innovations, right? So as a fund, you were investing and innovating in a portfolio, as opposed to just one company, right? And so I think these two things is what led me to be more on the fund side. I also realized as part of my journey as large companies that the risk appetite in large enterprises for disruptive innovation is limited in its early days because it's not mature enough, right? So it takes time for it to happen. So it is better funded at a fund level than it is at a corporate kind of level, where there's a major main business running. This is sort of like a side activity to some extent. It is too risky, right? And I went through the same sunscreen product. I went through risk evaluations on why or why not to launch. And, you could see that it's really hard for a very large enterprise to sort of take that risk. There's a reputational risk, if nothing else, that they sit on that they don't want to play with, right? Essentially. So that's where startups, different part of the risk reward spectrum. But also where there's a lot of very, very exciting innovation that's happening. And that's how I was going to do that.
Understood. You still have plans to continue as an investor?
Yes. I'm
even after giving exit to your LPs?
Yes. I'm in my, what I call my dream job. So I have no intention of quitting my dream job.
Understood. But you spoke of a burning idea, and that is a word which is, very subjective to different people. How is it for you at Ankur? How do you sense a burning idea in a founder when they pitch it to you?
It's really hard to describe, right? But there is an energy, there is a commitment, there is a problem solving that you see in the answers and interactions with entrepreneurs, when you do this, right? And when someone just comes and says, hey, I see this market gap, right? I'm coming, the commitment and the energy is just not there in the conversation. I don't even know how to describe it. It's very night and day, actually, right? And I'm not saying that this is not an approach for people to take, a more calculated approach. And I'm not saying that's wrong. I'm just saying that the journey in front is a tough journey, right? So you really got to believe in the fact that it can happen, and that requires that extra bit, right? Vis-a-vis the job.
Yeah.
Right? So I think it's quite clear. It just comes across in conversations. It comes across in approaches. You'll see the hustle, as you said. So the hustle. That's just, apparent, right? And the first step of this journey is a hustle. So if you don't do that hustle, it's not going to take off, right? Because unless you're selling water in a desert, that's a different place, but you never are. So I think that's
And in terms of answers, what is it that doesn't sit well with you? Because sometimes founders don't come well prepared, or either they're not able to story tell everything that they had planned in their mind. So as an investor, what is it really that you would want to look for from a founder, and that answer, if it doesn't come to you, then you might be in two minds?
I think that the part that we start worrying at, right, is that if you haven't thought enough about how this could be a business going forward, right? Like if it's you're too caught up in like product, for example, right? But you're not willing to go past the fact that, look, I might need to do some different things or adjust some things because ultimately I want to see this in the market. So I think that's where we sometimes start worrying, right? And it manifests in many different ways. It could be, as I said earlier, your ability to hire, right? Your ability to see this as part of the future, right? So these are things again that then start worrying us, right? Because it's a lot of effort. It's not an easy journey, right? It's far from an easy journey. It's not a 9-to-5 job. None of this, right? So it just takes a hell of a lot of extra effort to make that piece happen.
Yeah, there's a lot spoken about founders' depression also.
Yes.
Do you see that in your own founders also, and how do you help them overcome it?
So I think that probably we don't talk enough about founders' depression. It is a lonely journey. So we like teams. And I think one of the advantages of a team is there's somebody else with knee deep in this mess as you are, right? So you fully, you're down one day, the other person's not, you help each other along this phase, right? So I think one way for us to look at it is teams. That doesn't mean that, someone still may not enter founders' depression, etc. I think we as an ecosystem need to do more in terms of building the communities for founders where you realize you're not the only one, right? There are a lot of other people who've kind of done this. One of the things that we do at Ankur is that, we do what we call a sort of a peer learning kind of thing. And what that means is basically we're getting entrepreneurs who are perhaps further along in their journeys. They may even be very well known names in the ecosystem to come and sit in a room like this and chat, right? And one of the things, what happens is that they start describing the things that happened when they started. Right? And a lot of entrepreneurs see that this is not just me. Here's someone who might be a very well-known startup. But that first part of the journey, the guy was like, worrying about like all the people leaving his company and trying to figure out how to keep them there. So it's not me. Right? So I think we need more communities. We need to talk about the founders' depression a bit more. It's a marathon. It is a whole marathon, and you need support systems. So as Ankur, we can be that support system. My phone line's open. I get calls at all times, 3 hours from entrepreneurs, and I'm okay with that, right? I mean, this is the journey that helps build a company. And that's what we signed up for. So, but that's an individual basis doesn't solve an ecosystem. So I think that has to be there.
Right. And sometimes, investors also feel that, why is this founder asking me this question? I mean, it's the basic groundwork that they could have also done it themselves. So what are some of those basic things that you expect the founders to at least do it by themselves? Of course, your support will always be there, but...
No, you've got to know which pitch you're playing, right? I mean, I can't do that for you, right? If I have to tell you what the market is or what the opportunities are, you're the wrong entrepreneur to start with, right? You need to tell me the insights. You're coming in as an entrepreneur as to why your solution is something that will kind of work. Right? I can be a sounding board. I can, bring other people for you to get more information. But ultimately, you're the batsman,
Yeah.
right? So you got to read the pitch, not me.
Right.
So if you come and expect me to do that, that's a red flag period, right? I mean, how do I know? Essentially, right? So I mean, that's a pretty important.
That's the only one?
It's a very important one. Yeah, it's not the only one. I mean, it's hard to say there's only one thing. There's just a bunch of things, right? So when people ask, like, why does this not work, or why does this entrepreneur not work? I think it's an addition of things. It's hard to say there's one, right? I think where it falls apart is when, like, it reaches like a 40-50% kind of level. So not everybody's perfect. Of course, everybody will have things that they don't have, right? Like you asked me, then they say you're coming from an operating background, how does the finance side? You'll have that, right? The question really is, I can't supplement, you can't supplement, forget 50% of it in the early days, right? So you need to be on top of some of these. So it's a bunch of factors.
Yeah.
Right? But not knowing what market you're in, that's
have you encountered such problems?
Oh, lots.
Yeah.
Lots. We see last year before, we saw 6,000 companies, right? And there's a 6,000 that someone in the team spent some time either talking to or reading through their stuff or whatever it is, right? So that's quite a large, statistically, I think there's a lot more that we don't look at.
Yeah.
Right? Lots. You would be amazed.
My God.
Right, as to how many people, because they're being opportunistic, right? So there's a lot of people being opportunistic and saying, "Acha, wo wala model funded ho gaya, main bhi wahi karta hu," right? Kind of thing, right? So then you're like, "Acha, once you go past the first level, we are the X of X." Okay, so what does that mean? It falls apart, right? So you see lots of that.
Yeah, I think when you dig deeper, that's when you come to know the reality.
Yeah.
And how many quality founders do you then get? You said the number is higher on the other side, but what
we invested
about
in, I think, 6 companies that year.
Oh.
Right. So the statistics were quite bad.
Yeah.
Right.
And how do you think we can improve this? How can founders know what to do about their own research and companies?
I feel a lot of those people were not serious.
Okay.
Right. So I think it was opportunism. Right. So we can't solve for opportunism.
Yeah.
Right. I mean, if you're just looking for the quick buck and you're like, oh yeah, people are investing, so let me get that quick buck. We can't solve for that. I think that if you come down to the people who are serious and they have these gaps, I think that you're just connecting more into the ecosystem. Today, when we started, I would say that the ecosystem was broken. So there wasn't really like accelerators, incubators, mentors, other entrepreneurs that we could kind of speak with. Today, it's a flush with it. So I think we need to interact more with the ecosystem is what.
But since you've been, operating in the FMCG space, what's your take on the D2C brands that are wanting to create a disruption in skincare, where maybe legacy brands like Unilever, where you spoke of the sunscreen product, already have a shelf in the market?
It's such a large market. There's room for everybody, right? So I mean, we're a $1.4 billion billion people, sorry, not dollars. And you can cut and slice the population in many different ways. So I think there's an opportunity for everybody.
Really? You think there's an opportunity for everything now in India?
I think we haven't gotten into the deeper pockets, right? I mean, if you look at a Western market, the number of brands that exist is very, very high.
Yeah.
Right? Now, is everything $1 billion brand? No. Right? We are not there on our GDP curve, right? But are the plethora of, customers there? Yes, of course.
Yeah.
Right? I mean, there's enough instances of brands, and I'm talking about the cosmetic space, of like, appealing to whether it's plant-based or whether it's, a particular type of feel, I mean, there's a lot.
But how do you ensure scalability in this regard? Because you said every business is not $1 billion.
That's a challenge. So I think we are a market of micro markets, right? So you may find some fit over here. So as a D2C brand, I think if you don't look at the population as a larger set of the population where you're adding up different micro pockets, I think you have a bit of a challenge.
Yeah.
And there, I think the larger people who've been around forever have like said, okay, I'm not touching the micro pocket. I'm actually touching the things that run across everything.
Yeah.
Right? So I could talk about a soap and say, hey, some people like lemon, some people like rose, some people like whatever. So I'm going to put, it's the same soap. That's all. It's a simple change for me to make. I'll make 5 different variants and I will sell it in the market, right? So then you'll be fighting some of that, right? If that's what you're going to do.
Yeah.
But
maybe that's the reason why we see more of consolidation in this space rather than valuation jumps.
Yeah, I think consolidation is, in the India market, is micro markets.
Yeah.
Consolidation on the micro markets is what you sort of do, right? To speak to everybody.
Yeah.
And we are definitely not homogeneous.
Right.
Yeah, maybe to buy petrol, maybe to, I don't know, maybe even cooking oil, but not.
But you invest in various sectors like Fintech, EdTech, Agri-Tech. What are the key themes that you see evolving in these 2-3 sectors over the years now in India?
So I think to us, there's 2 stories that we're investing behind, and there's an underlying story again.
Yeah.
Right? So we're investing in the opportunity of digitization and decarbonization with a focus on what I would call the mass markets. So I'm much more interested in the, 500 million, 700 million people who sit in the mass market category, and what can all of this do, right? So I think one of the opportunities lies in the hyper fragmentation of these micro markets that we have, right? And there will be, one is, the core thing here is, can you economically effectively service these micro markets, right? And micro pockets, I would have, right? We are not quite there to be spending $500 on like makeup or any such thing. So, and digital comes in as a very handy tool to be able to reach these more cost effectively, to customize more cost effectively, all of that kind of stuff, right? So, we do, as you said, a lot of agri-tech investments. We have small farm holdings, we have small customers, there's a challenge between what is being produced and what is wants to be eaten. How do you connect the two, right? It's matchmaking kind of exercise, and that's where technology comes in to say, look, how can I do that more efficient? So that's roughly on the digital side.
Okay.
I think that there is also the opportunity for the right products and, for these markets as well. So let me take Niramai, who you've spoken to. While we worry about the cost of mammography and the sort of the machine and the capital, etc., then the larger challenge is you need radiologists. So I can imagine some government or a very rich person coming and donating this for the country, right? But you don't have the radiologists in it, right? So you ultimately just need a different kind of tool here. Right? And that's what she does, where the cognitive load is sitting on the AI and the actual capex is obviously much lower. It's mobile, all of that good stuff. So these are the kinds of products and solutions for these mass markets that are, I think, very critical. We have another company which is battery chemistry, and we're using battery chemistry, right? While the chemistry is good for storage and fast charging, it's also powering 3-wheelers. Okay. So now we've been used to such very fundamental technologies, coming from Silicon Valley or wherever else, and then, finally becoming cheap enough to, address our markets. But nobody in those markets are thinking of 3-wheelers, right? There are none of those running around, right? And we don't really need a Tesla battery sitting inside a 3-wheeler that doesn't go about 20 kilometers an hour, right? So these are some of the contextual mass innovations that we're also excited.
Right. And I also have some questions around some of your portfolio companies as to how did you happen to meet with those founders, starting with Josh Talks. How did that happen?
How did we meet them? So I'm not sure I have the exact answer, but we have a large team that's going on with people. So I suspect one of them.
What made you invest into them?
So they're a very exciting company, and I think what we really liked about them is that they're in the heart of India. And I think they understand the problem at the heart of India. So, they kind of describe themselves as a TED Talks for Bharat. Right? And they said, Bharat is not listening to the TED Talks and being inspired. It's too removed from their day to day, right? But there are real life, real people that they can relate to who can be the TED Talk speakers, right? the bade bhaiya, as they like to call it, or bade behan, right? As who, can address the aspirations, the career pathways, etc. for people in the masses of India, right? So I think their depth in that market, the response that they had gotten, their understanding of what the market needs was super impressive, and that's roughly how we got it.
Yeah, specifically I asked you this question because today we see a lot of creators and influencers with their digital communities coming up with such concepts. So as an investor, what are the key metrics that you would look at before investing money into their businesses?
So I think the product that you are selling and your user engagement and the user value for that is very critical, right? So I think that's something we saw in Josh, that, the product market fit was there.
Yeah.
So you could see that in the usage, you could see that in the time spent, you could see that in the love that they got, all of that, right? So clearly, it was a platform that spoke to a large population.
Yeah.
Right? So, that was the metric. Metric.
Yeah. And in the fintech side, you only have one company in your portfolio.
We have two, actually.
Oh, on website it only showed me one.
One is an InsurTech in agri and climate, so maybe it's been crossed over. It's positioned as a crossover. So we have an InsurTech company and we have a BNPL lending company.
Yeah.
Two companies as well.
And in fintech, what are the metrics? I'm just asking from an audience perspective because they won't get a meeting with you, so I'd rather ask you here.
I think we're interested in a product that unlocks a market. I'm not sure we're completely interested in just regular consumer lending and a lot of the other stuff that is already around. So we're interested in product innovation and innovation that can kind of look at larger segments, look at newer segments and serve their needs. So that's one level of it. So for example, I would give you both 𝒂𝒑 and 𝒂𝒑. They have a product that's serving a very large segment, easy to use. It's not a loan that you will get out of or a bank or insurance that you will buy from bank either. So it's a new product, right? That's one part of it. I think the second part of it is that does the product have legs? Right? And, in a financing business, it's pretty important that, your NPAs, etc. Something that you have some sense about and why you will not get into the red zone. So obviously those kind of metrics are important.
Understood. But before we move into the last segment of our interview, which is rapid fire, I'd like to ask you a question based on our theme as to how have you wiped out a norm in your life, and have you seen a founder, one of the founders in your portfolio companies wiping out the norm, except for Nirama, because we've spoken a lot about them now.
To me, each one of our entrepreneurs is wiping out the norm, which is why we're investing in them. Right? When you're wiping out the norm, may not seem that obvious, but they're huge norms, right? I can talk about String Bio. It's doing biotech in India, taking it to the world. That's wiping norm off, right? This is not something that's kind of happening. We have ag supply chain companies that are like deep into the heart of India, wiping out how trade happens and we produce it, right? So each one of them is wiping out the norm. I would say it's right. To me, my norm gets wiped out when I engage with these entrepreneurs, right? So it's like you expect X, but X doesn't really happen and Y does, right? It gets wiped out with, and you have your biases thrown straight at your face when you do this, right? So you think this will work. It doesn't. Something very different works, right? And you're like, okay, I better recalibrate. So you redefine your norm. So that's what I love about the job, because you have to redefine your norm.
That way you're wiping out the norm every day, I must say.
You're wiping out the norm every day, right? So I think if you have to invest in the future, you have to figure out how the norm is getting wiped out.
Right.
So, we have enough conversations internally about the norms getting wiped out, right? Because every time you do talk about it, one of the things you're like, why will this happen and not that? Right? So it is a bit of, the business we are in is about wiping out norms. So otherwise I think then it's business as usual, which is a different kind of, not a early stage VC business.
That's a good answer actually. Starting with the rapid fire, which was one of the most amazing founder pitches. I'm sure you're going to tell me all of them, but one where you really thought of it to be something else and the founder presented it to you in a different light and you really got convinced on that.
There's a lot of founders that I have met who are very, very good storytellers, articulators. and you're kind of floored, right? When you meet them and the way speak, present, all of that good stuff. I think it's when you get to the second layer that you realize, oh, wait a minute, that was a good TED talk. Well, usually people who do TED talks have a lot of experience, whatever subject matter stuff, but there isn't much legs behind that. So there's lots of that basically in the ecosystem.
Yeah, and then my question.
The question on the reverse of it, that wherever. I mean,
your favorite founder pitch.
So, for example, we've been investing in supply chains quite a bit, right? I think the question as to why and how you would change things and how it happens in India, because these changes all exist, right? I sort of have a somewhat of a bleak view on some of it. All the cynicism creeps in after you've been down first way. But I was very recently in Hood, where an entrepreneur was changing the paradigm of sort of how some of these supply chains can kind of work, right? So after having spent close to 10 years in this space, there was still something new that was being done. There were farmers coming onto a platform, looking to digitally engage, get digitally paid, buyers, so just quite a disruption, I would say, in the ecosystem. So, 10 years, everyone says so, but it doesn't really happen. It's just a little bit of a candy cover here.
Yeah.
But there's a reality. So.
Your favorite childhood memory?
God, my favorite childhood memories, that's ancient,
That's why it's part of the rapid fire in the end.
Biking.
Biking?
Yeah.
Oh, wow. That's really unique. Do you not do it anymore?
No.
Why?
There's no place to bike. There wasn't that much traffic. You had neighborhoods you could bike. You could just,
Which place were you born in?
I grew up in Calcutta.
Okay.
Yeah, so quiet streets, you could bike. You can't go bike in big cities.
Yeah.
That's no fun either. So.
Right. And top 3 founder qualities that you can't let go of?
I would say hustle, vision, and connectedness to the ground.
Oh yeah, that's very important.
So those 3 things are all critical.
So what's your sweet spot for exit?
We typically want to get out in the CD rounds, basically, the early stage investors. So we want to invest up to a B round and post that, looking to exit.
Okay. What's your ticket size generally?
So we start at about between 1 million to 2 million, but we, can go up to about 10 million with our next fund, but on follow-on investments.
Understood. And what's the fund corpus now?
So we are actually in the midst of raising our 3rd fund.
Okay.
It's at $150 million.
Okay, that's nice. Yeah. And how much was the second fund at?
The second was $50 million.
That's a nice jump.
Yeah, but we are growing as a country and
right.
economy, so everyone thinks a nice jump. But
what kind of LPs are you targeting at?
We're looking, we have existing LPs that are coming back to back us, and we're open to other LPs of family houses and more institutional capital.
Okay, that's good. I'll keep an eye out for that. Lastly, what's the last thing that you did for the first time?
The last thing that I did for the very first time. Wow. Such a hard question. What did I do for the very... Oh, I know. I played one of those 3D games, those virtual reality games. We had an offsite, not offsite, we had a team dinner. And, one of those virtual, you put on the...
What is it called?
VR headset, and then you go into a room and they have, they simulate you kind of going through a battlefield is how I felt. That was the first time I did that. Yes, that was something first time I did.
Nice. Just for the benefit of audience, before we just wrap up, I just got reminded of this, since a lot of people would want to work with you and the team at Ankur. What's the hiring criteria like?
So, we have roles that are open and each one has a specific criteria, but I think the general criteria across everything is the fact that you've got to really enjoy doing this. Like, you've got to, it's hard work. It's super exciting, but it's not an easy walk. Right? So, this is something you have to enjoy because it's not a 9-to-5 job.
But do you look at degrees, or you're okay with any smart graduate also joining your team at the fresher
We had
level?
a mix of people and a mix of responses. So I'm not that hung up on degrees.
Yeah.
I'm just not hung up on, like, can you do the job and do you have the willingness to do the job? Right. I think those two things are very important. I think sometimes the degree gives you structure, right? It gives you structure on navigating some of this. And I find that we have some very fancy degrees in this country, but the degree has not necessarily given you the basis to form that structure to kind of approach the problems. So one thing you have to realize that as an investor in this early stage, it's a very, very unstructured, there are no templates. There are no process,
it's not a PE fund.
It's not a PE fund. This is not an Excel sheet exercise, right? You can build as many Excel sheets as you like, but the reality of the value lies elsewhere. So, one thing is that there's ambiguity in this business. There's no structure, right? So, some parts of education as well as work experience gives you the ability to navigate through unstructured environments and provide some structure to actually be able to do the job, right? So I think that's a critical skill. Yeah. Otherwise, whereas you could go work for a large organization, they give you the template, they give you the boundary, and they say, here's what you have to do inside this boundary, right? For us, that's not true.
Yeah.
So I think somebody has to be comfortable, somebody has to enjoy that. And, we've hired some fancy degrees and that doesn't help.
Yeah.
Right. So the softer
it's only a matter of realization.
Yes. It's the softer aspects of it and it can come from multiple.
Yeah, right. But on that note, we come to the end of the interview. I hope I've not bored you enough.
No, thank you. Lovely to chat. Thank you for having me.
Yes.